So today we start asset accounting. See, asset accounting. This component is used to process the business transactions relating to assets. Here, assets means fixed assets only. Okay, like plant and machinery, buildings, vehicles, like land, assets under construction, etc., etc. So this component is used to process the business transactions relating to assets. And the following are the asset transactions. What are the business transactions relating to fixed assets? Acquisition of assets. So for running the business, right, the companies will acquire number of fixed assets like land and buildings, plant and machineries, vehicles, furniture, etc., etc. When we purchase the fixed assets, how to process them in accounting, then sale of asset. So sometimes some fixed assets will have expected useful life. Once that useful life is over, right, those assets may not be that much effective, right? That's why we sell the existing fixed assets, and in those places we purchase the new assets, right? In that case, how to process the sale of assets, then transfer of assets. Sometimes within the company code, you transfer the fixed assets from one branch to another branch or from one place to another place, like that. In that case, how to process them, then scrapping of assets. Sometimes, right, the existing assets may not be useful at all further, right? In that case, we scrap the assets, and in the place of scrapped assets, we purchase the new assets. So when the assets are scrapped, how to process them? Then calculation of depreciation and balance sheet values. This is very, very important function, or this is the very, very important feature which we use in the asset accounting. Calculation of depreciation and balance sheet values. See, in FI, we prepare the financial statements, P&L account and balance sheet. For the purpose of preparing balance sheet, we require asset values. And also for P&L account, we require depreciation. Depreciation and expenditure to be charged to profit and loss account. So how to calculate depreciation and how to calculate the values to be displayed in the balance sheet is ascertained, is dealt in the asset accounting. So the main purpose of this asset accounting is calculation of depreciation and balance sheet values. So during the process of configuration for this activity, right, we also develop the configuration eventually for processing of acquisition of assets, sale of assets, transfer of assets, and scrapping of assets, right? Then the asset accounting is also maintained on the principles of subsidiary ledgers, like accounts payable, account receivable, asset accounting, right? So here, the accounts payable and accounts receivables, they are integrated with the general ledger through reconciliation accounts, right? Like that. The asset accounting is also integrated with the general ledger through reconciliation accounts. And the purpose of the asset accounting is to calculate and post the depreciation and to find the values of assets to be represented in the balance sheet. Here, every company will use hundreds and thousands of fixed assets, right? So suppose you are using 10,000 assets, right? So on all the 10,000 assets, we have to calculate depreciation and we have to ascertain the balance sheet values every month because you are preparing the financial statements every month. Then on every fixed asset, we are using different methods of depreciation and different rates of depreciation. In that case, calculating and charging of depreciation to the P&L account is very cumbersome, right? Very difficult also. It takes number of days together to calculate and post the depreciation on all the 10,000 assets. So you may not be able to prepare the financial statements in time, maybe monthly or quarterly like that, right? That's why using this asset accounting component, right, the system can calculate and post the depreciation on 16,000 number of assets within 2 hours. So that is the beauty of this asset accounting component, right? So as I said, The main purpose of the asset accounting is to calculate and post the depreciation and to find the values of assets to be represented in the balance sheet. So basically, what is depreciation? Of course, everybody knows, but again, I'm recapitulating. What is depreciation? It is the reduction in the value of asset during the expected useful life of the asset due to normal wear and tear. See, it is the reduction in the value of assets during the expected useful life of asset due to normal wear and tear. Means basically there are two types of expenditures. Number one, revenue expenditure. Number one, revenue expenditure. So in the case of revenue expenditure, the benefit you get will expire immediately or it might have already expired. Suppose you are paying salaries. Means what? You already got the benefit from the payment of salaries. You are paying rent. Already you have got the benefit from using the landlord's premises. So you are paying rent. So like that, all the expenses in case of which the benefit you receive will expire immediately or already it might have expired. That expenditure is called revenue expenditure. And the revenue expenditure is always charged to profit and loss account. Then another type of expenditure is capital expenditure. So in the case of capital expenditure, the benefit you derive will be spreading into some number of years into future. Say for example, right? Take one plant and machinery. So using the plant and machinery, you can produce the goods for the next 15 years. You will be able to sell the goods and you will be able to get the benefit. So you are going to use this plant and machinery for next 15 years. And the investment you have made is 1 crore. This is called capital expenditure. So the investment in fixed expenditure is always called, the investment in the fixed assets is always called capital expenditure. And this capital expenditure is displayed in the balance sheet. Now, it is quite common that when you start using any fixed asset, right, it will start losing some value. Remember, when you start using any fixed asset, it will start losing some value. Say, for example, you purchased one car for 25 lakhs today, and you have used it for 4 years. After 4 years, you just wanted to change the brand. So you are selling, you will be trying to sell the car in the second-hand market or in the used cars market, right? Then will you be able to get the same 25 lakhs what you have spent originally? No. Why? Suppose you have been able to sell the car after 4 years for 15 lakhs. So why so? Because you have used this car, right, for 4 years. As a result, it has lost some of its value. The lost value should be borne by you because you have used the car for 4 years and you have derived some benefit from the car. That value lost is called depreciation. Remember, the value should be lost by the uses of the car only. The value should be lost by the usage only. Suppose due to some accident, the car value also has reduced, right? In that case, it cannot be called as depreciation. It is called abnormal loss. It is called abnormal loss. Okay. So like that, in the case of assets owned by the company also, right? When we start using them, it will lose some of its value. That value reduction should be taken as depreciation and that amount is to be charged to profit and loss account. And the value should be reduced due to normal wear and tear, right? Not by any external activity, right? Like accidents, fire accidents, natural calamities, etc., right? Now, so in order to calculate depreciation, we have number of methods and rates. So according to the requirements of the company management, we can use any method or any rate of depreciation. In whatever case, right? Whatever method you are using and whatever rate you are using, you arrive some amount of depreciation, right? So how that amount of depreciation is accounted? Scheme of entries. The entry, when the depreciation is calculated, the entry to be posted is depreciation account data to accumulated depreciation on asset. The account to be debited is always depreciation account. Remember, the account to be debited is always depreciation account. Right? Depreciation account data. So the account to be debited is always depreciation, right? But the account to be created is accumulated depreciation on asset account. Accumulated depreciation on asset account means accumulated depreciation on respective asset. Means if you calculate depreciation on the buildings, entry to be posted is depreciation account data to accumulated depreciation on buildings. If you calculate depreciation on plant and machinery, the entry to be posted is depreciation account data to accumulated depreciation on plant and machinery. And if you calculate depreciation on vehicles, the entry to be posted is depreciation account data to accumulated depreciation on vehicles and so on. So in this case, depreciation account is an expenditure account. So it is transferred to profit and loss account. See, profit and loss account data to depreciation account. Then there will be balance in the accumulated depreciation on asset account, right? This balance in accumulated depreciation will be displayed on the liability side of the balance sheet at the end of the year. So from the balance sheet, it will be carried forward to next year. Again, the depreciation which we calculate for the next year will be added to accumulated depreciation at the beginning of the second year. So the total amount of accumulated depreciation at the end of the second year will be shown in the balance sheet of second year. Like that, right? The accumulated depreciation on asset will be going on being carried forward every year. Then whenever you sell the asset or whenever you scrap the asset, that accumulated depreciation is reduced from the acquisition value of that asset, and accordingly we will find either profit or loss on the sale of asset or scrapping of asset, and we account them accordingly. Clear, no? So in order to process the business transactions, right, first of all, we have to maintain the master record for every fixed asset. Just like you have maintained the master record for GL account, master record for vendor, master record for customers. So similarly, we have to maintain the master record for each fixed asset in asset accounting. So master record means every master record should be identified with a number. So the asset master record also should be identified with a number. So from where the number is to be taken? From the account groups. GL account master record number was taken from GL account groups. Vendor master record number was taken from vendor account groups. Customer master record number was taken from customer master records, and asset master record number is to be taken from asset account group. But they are not called asset account groups, right? They are technically called asset classes. Just for understanding purpose, I use the word asset account groups, but you should not use the word asset account groups. They are called asset classes technically. Okay. So what is the meaning of asset classes? It is the criteria for classifying the assets of the company according to management and legal requirements. See, it is the criteria for classifying the assets of the company according to management and legal requirements. That means, how do you have to classify your fixed assets in the balance sheet? And according to legal requirements of the country in which you are doing the business. How do you have to classify your fixed assets in the balance sheet? Will be the criteria for designing the asset classes. Say, for example, in the balance sheet, we have to display land separately, assume. Then land is a separate asset class. We have to display building separately. Then buildings is asset class. You have 25 buildings, right? So you maintain the master records for all the 25 buildings under the buildings class. Then you display the total value of all the 25 buildings in the balance sheet, asset side. You have 50 plant and machineries, right? So you create plant and machinery as one asset class. F and F means furniture and fixtures, or furniture, one asset class. Vehicles is one asset class. Like that, how do we classify, or how many number of asset classes we have to create is decided by the criteria according to which you have to display your fixed assets in the balance sheet. Say, for example, you have 50 plant and machineries already, right? So this year you have started erecting one plant and machinery, or you say you have 11 buildings already. This year you have started constructing 11th building, 12th building, right? And as on the balance sheet date, as on 31st March 2023, right, the building number 12 is not yet completed. But already you have made some investment, capital expenditure, right? Then that has to be displayed in the balance sheet on the asset side under what heading? Assets and construction. And you are erecting on plant and machinery. So that being erected plant and machinery is to be displayed under assets and construction. So you create another asset class as assets and construction. You create another asset class as assets and construction. Then you have, say for example, you have the goodwill, right? And you have the patent rights. So where do we display? Where do we means in the balance sheet on the asset side, right? On what heading you display this goodwill and the patent rights? Any idea? Intangible assets, right?
Tangible assets.
Yes, exactly. So you create intangible assets as another asset class. And say, for example, right, one more example. In the Indian Companies Act, there is one provision given to companies that if the acquisition value of any fixed asset, remember, if the acquisition value of any fixed asset is equal to 5,000 or less than 5,000, then the total acquisition value can be written off as depreciation in the year of purchase itself. This type of assets are called low value assets. So create another asset class, low value assets, right? Like that, you create as many number of asset classes as required according to balance sheet display requirements. Now, for example, you have 10 lands, right? Then the master records for all the 10 lands are created under the land class. Just like respect to GL accounts are created under the respect to account groups, right? You have 12 buildings. Their master records are created under the buildings class. You have 50 plant and machineries. Their master records are created under the plant and machinery class, and so on. And as I said, every asset master record is identified with a number. That's why, right, for every asset class, we create and assign a number range. First, you define the number ranges, right? Say, for example, number range 01, number range number 01. For the number range number 01, we assign the value 1 to 1 lakh. For the number range number 02, we assign the values 1 lakh, 1 to 2 lakhs, just as an example. Then for the number range number 03, we assign 2 lakh, 1 to 3 lakhs, and so on. After that, we assign the number range number 01 in the land class, number range number 02 in the buildings class, number range number 03 in the plant and machinery class, and so on. So when you create the master records for the individual fixed assets under the respective asset classes, the system will take the number accordingly. Say, for example, right, yours is a construction company, right? And you are using on plant and machinery, which you call it as crane, C-R-A-N-E, crane. So crane is the equipment. Crane is the equipment, right, which we use to lift heavy weights. So that is the plant and machinery for the construction company. Then its master record is created under the plant and machinery class, right? Then the system will take the number 2,01,000. So in this case, you have one concept, main asset and a sub asset. So here, the crane is called main asset. Then what is sub asset? Say, for example, we have one generator, right? It is exclusively used for the purpose of crane only. So crane is fitted with the generator, and the main purpose of the generator is to supply the power only to the crane exclusively. And the generator is fitted on the platform of the crane. Wherever the crane moves, generator also moves. And this generator cannot be used, this generator is not used for any other electrical purpose. It is exclusively used for the purpose of the crane. In this case, crane is called main asset and generator is called sub asset. So when we create the master record for the generator, the system will take the number 2,01,1. Similarly, we have one toolkit. So the supplier of the crane, he said, right, the crane is not included in the acquisition cost of the, the cost of the toolkit. The cost of the toolkit is not included in the acquisition cost of the crane. It has to be purchased separately, whose value is 3 lakhs. So that toolkit is obviously used only for the purpose of the crane, right? It cannot be used for any other purpose. In that case, the toolkit is called sub-asset. So when we create the master record for the toolkit, the system will take the number 2,01,2. So like that, right? We can create up to 9,999 sub-assets under one main asset. Under one main asset. So how do we distinguish between main asset and sub-assets? In the place of sub-asset number, if you see the number 0. In the place of sub-asset number, if you notice 0, that is the main asset. Other than 0, sub-asset, right? So this is the concept of asset classes. So the asset classes propose the default values for the asset master records and the depreciation calculation on the assets created under the respective class. See, what are the functions of the asset classes, right? The asset classes propose the default values for the asset master records and the depreciation calculation on the assets created under the respective class. Then the asset class also controls the account determination key, screen layout rules, and number range for asset master records created under that asset class. This function I will explain you while doing the configuration. Then the rules for creation of asset master records. The main asset master records are created with reference to asset class. That means in the transaction code, where we create the master record for main asset, the system will ask you to enter the asset class. And of course, the transaction codes are different for main asset creation and sub asset creation. So in the transaction code, where we create the master record for main asset, the system will ask you, right, to enter the asset class. Then sub asset master records are created with reference to main asset master records. This I will clearly show you while creating the asset master records. Then you have to understand another concept, depreciation area. It is the area showing the valuation of fixed assets for a particular purpose, such as individual financial statements, then balance sheet for tax purpose or management accounting values. That means just for your understanding purpose, right? Depreciation area means the purpose for which depreciation is calculated. What does it mean, purpose? Means we have to prepare the financial statements. For example, if you take Indian companies, we have to prepare the financial statements according to the legal requirements of Indian Companies Act 2013. So that is one purpose. That is called one depreciation area. Now, balance sheet for tax purpose. What does it mean, tax purpose? See, according to Companies Act, we have prepared the P&L account and balance sheet, right? Then for the year, you have to pay income tax on the profits you earned. But according to Income Tax Act, right, some expenses are allowed and some expenses are disallowed. Say, for example, you take depreciation on the plant and machinery. According to the requirements of financial statements preparation, we are using straight line method, 10% on the plant and machinery. But according to Income Tax Act, 10% straight line method is not allowed on the plant and machinery. According to Income Tax Act, right, we have to calculate depreciation on the plant and machinery at 5% using written down value method. So in that case, what happens? Again, you have to prepare the financial statements according to Income Tax Act. That means you add back the depreciation calculated according to Companies Act to the net profit. Then again, you recalculate the depreciation on the plant and machinery, 5% return on value method. Then that is reduced from the net profits. That will be your taxable profits. That means, again, you are recalculating the depreciation, right, for the purpose of Income Tax Act. This is called another depreciation area. Then management accounting values. Sometimes in order to take the decisions, like whether to purchase the fixed asset or you have to hide the fixed asset, like that, you do some calculations, right, for the purpose of decision making. During the process of that calculations, again you calculate the depreciation on the proposed assets. This is called management accounting values. Like that, right? Like that. We calculate depreciation for different purposes. Each such purpose is called depreciation area, right? Just a minute. Yes, Sri Lekha, right? See, we have to change the account, not accounting policies. Accounting policies are different, right? Not accounting policies, right? You have to do some calculations according to Income Tax Act. Some expenses will be allowed, some expenses may not be allowed, and sometimes they will give you some rebates according to Income Tax Act, right? So we have to take into all these considerations, right? You have to account for all these considerations. So if you calculate the depreciation for income tax purpose, that is called another depreciation area. Okay, then chart of depreciation. It is the list of depreciation areas used by the company code, right? Chart of depreciation means it is a list of depreciation areas, and each company code is assigned to one chart of depreciation. Mandatory, right? Within brackets, mandatory. Each company code is assigned to one chart of depreciation, within brackets, mandatory. Then a chart of depreciation can be used by several company codes. Continue. Provided all the company codes are lying in the same country. A chart of depreciation can be used by several company codes, provided all the company codes are lying in the same country. Because chart of accounts is country specific. Chart of accounts is country specific. Okay. Then the chart of depreciation and chart of accounts are independent to each other. Then the chart of depreciation is always to be copied from the reference chart of depreciation defaultly delivered with the software. See, in the system already, right, the chart of depreciations, according to the requirements of almost all the countries, have been defaultly defined. So if you have the required chart of depreciation in the list, you can straight away assign it to your company code. Otherwise, you can create your own chart of depreciation by copying from one of the existing chart of depreciations. Okay. I will show you how to copy. Then depreciation types in SAP. Number one, ordinary depreciation. Ordinary depreciation means the planned distribution of the acquisition cost of an asset over the course of its useful life using a depreciation method. The ordinary depreciation depicts the value reduction caused by the normal wear and tear. Just for your simple understanding purpose, whatever the depreciation you calculate for the purpose of preparation of financial statements according to Companies Act, that is called ordinary depreciation, right? Continue this paragraph. This depreciation is also called planned depreciation, or book depreciation. Planned depreciation or book depreciation or ordinary depreciation. Sorry, all are same. Just give me 1 minute. Okay. Now, special tax depreciation. It is the depreciation provided for the tax reasons, means for tax purpose. This is also called tax depreciation. Special depreciation or tax depreciation, both are same. I told you, we have to recalculate the depreciation according to income tax rates and methods. That is called special depreciation. Then unplanned depreciation. The reduction in the value of asset due to an event whose effect is permanent. Means, see, here, the book value of the asset as on 1/4/2018. Let us assume we are in the fiscal year 2018, right? So the book value of asset as on 1/4/2018 is 1 lakh. Unfortunately, a fire accident occurred on 25/7/2018. Due to the fire accident, there was a damage to the plant and machinery, but still the plant and machinery is in usable condition. So after the fire accident, right, the management has got that plant and machinery evaluated by the professional valuers or engineers. And they said, right, after the accident, the value of the plant and machinery is 60,000. Then what happened to 40,000? That 40,000 was lost due to the fire accident, and the impact of the fire accident on that asset is permanent. This 40,000 is called unplanned depreciation. In the normal accounting language, this is called abnormal loss. But in SAP, this is called unplanned depreciation. And system cannot calculate unplanned depreciation. It has to be posted manually. unplanned depreciation is always to be posted manually because system cannot calculate the unplanned depreciation, right? So this is the theoretical part of asset accounting, and there are many more concepts. These concepts I will be explaining throughout our configuration, right? So check country specific settings. In this step, we define the general parameters at the country level for the asset accounting, like country currency, maximum value for low value assets, etc. So while doing the step, I will explain. SPRO, financial accounting, asset accounting, organized structures, check country specific settings. Click on position. Country is equal to IN. Country is equal to IN. Click on enter. Select country IN. Click on details button. Country key India, currency INR, then maximum LVA amount for posting 5,000. Means I told you, in India, right, if the acquisition value of an asset is equal to 5,000 rupees or less than 5,000 rupees, the total acquisition value can be written off as depreciation, right? So in India, what is the threshold limit for an asset to be considered as low value asset? It is 5,000. In USA, it may be $150, for example. In that case, we can go to country USA. We can make the changes there. So here we can make the changes. Somebody has posted $250,000. Somebody has changed it, some student. So like that, we can make the settings in the country level. Just a minute. So maximum LVA amount for posting. LVA means low value asset, right? If you want, you can write down there. LVA stands for low value assets. Then copy reference chart of depreciation or depreciation areas. Now we are going to create our chart of depreciation. Path is same as above, right? Copy reference chart of depreciation or depreciation areas. And do one thing. Here, you please write down, follow the path only, within brackets. Here, copy reference chart of depreciation or depreciation areas is there, no? Within brackets, follow the path only. Yes. Double click on copy reference chart of depreciation. So here I'm just going to show how to copy, right? Then you get one blank screen like this. Then go to menu, organizational object, copy organizational object from chart of depreciation. If you press on F4, right, you can see the chart of depreciations, which were already defined in the system, right? So up to 0 ZA. These are the depreciation charts already created in the system, right? Now, from chart of depreciation is equal to ODE. Just like that, I'm taking from ODE, nothing else. You can copy from any chart of depreciation. ODE, maximum valuation Germany. To chart of depreciation SSKH. So I am giving our own company code name for our chart of depreciation. Click on enter. You have to click on enter till you get the message chart of depreciation is copied. chart of depreciation ODE, copy to SSKH. Click on enter. So ignore all the messages, click on enter. Click on back arrow. Double click on specify the description of chart of depreciation. Double click on specify the description of chart of depreciation. Click on position. Chart of depreciation is equal to SSKH. Chart of depreciation is equal to SSKH. Click on enter. So you have to change the description, that's it. For our chart of depreciation SSKH, you have to change the description. Description is equal to chart of depreciation for SSKH. Chart of depreciation for SSKH. Click on save and enter. Then click on back arrow. Copy, delete depreciation areas. Double click on copy, delete depreciation areas. Means here from the ODE chart of depreciation, some depreciation areas have been copied to our chart of depreciation. Out of those depreciation areas, we have to keep only those depreciation areas according to your requirements, and other depreciation areas have to be deleted, right? While doing the step, again, I will explain. Double click on copy, delete depreciation areas. Chart of depreciation is equal to SSKH. Click on enter. See, these are the depreciation areas that have been copied. 11 depreciation areas are there in the ODE chart of depreciation, right? So all these 11 depreciation areas have been copied to our chart of depreciation. So out of these depreciation areas, we want to keep only some depreciation areas, and others we have to delete. Go to menu, edit, selections, select all. See, all the depreciation areas are selected. Out of this, deselect 01 book depreciation or 1. Then 02 special tax depreciation for APC in the financial statements. Then 3 or 03 special reserves because of special tax depreciation. Then 32 book depreciation group currency. So I want to use only for these depreciation, only these 4 depreciation areas, and other depreciation areas we have to delete. Go to menu, edit, delete. See, 7 depreciation areas have been deleted. Click on save. So what are all these depreciation areas? I will be going and explaining you. Click enter on the messages. Now here, suppose your company code is in India, right? So for Indian Companies Act, for Indian company code requirements, already one chart of depreciation was defined. See, that is one US, one IN. See, one IN. Sample chart of depreciation India, write down. The depreciation, the chart of depreciation according to Indian requirements, the chart of depreciation according to Indian requirements is one IN. See, in one IN, what are the depreciation areas? I want to display depreciation areas in one IN, right? For that purpose, double click on copy, delete depreciation areas. Chart of depreciation, one IN. Then click on enter. See, book depreciation, depreciation as per Income Tax Act, right? There are some other depreciation areas are also there, like investment elements, etc., etc. Somebody has deleted these depreciation areas. Suppose, write down one US, 1 US is the chart of depreciation. 1 US is the chart of depreciation according to USA Companies Act requirements. USA Companies Act requirements. See, I want to display depreciation areas in 1 US. See, book depreciation. Book depreciation will be there in every depreciation chart, right? Federal tax, ACRMS, MACRS, alternate minimum tax, adjusted current earnings. These are all depreciation areas according to USA Federal Companies Act. Like that, the chart of depreciations according to the requirements of almost all the countries have been defined. If you don't find the depreciation chart you require, you can create your own by copying as we have seen now. Then creation of zero tax codes for sales and purchases. This we will see in tomorrow's class. Any questions?
Sir?
Yes.
What is the use of alternative general GL account number in the general ledger master record, sir?
Okay, that is the GL account number in the country specific chart of accounts.
Okay, like what if we have not added in the before and we want to add it now? Do we need to make changes in the country specific chart of accounts?
Obviously, right? So
Okay.
first you have to assign the country specific chart of accounts to your company code, right? Then the alternate chart of accounts, the alternate account number will become mandatory field in your company code segment data of your GL account master record.
Okay. Okay, sir. May I also know, like in the check register, we'll have a payroll check box, right, sir? What does that mean?
Yeah. See, if you select the checkbox, right, that check lot can be used only for the payment of salaries and wages. You cannot use the check lot for making the payments to vendors. Okay.
Okay. Okay, sir. And one last thing, like, sir, while practicing in the morning sessions, sometimes frequently, maybe server is buffering, sir. Like it is buffering for
No,
a
it
long
depends
time.
on, no, it's not buffering. Check your internet speed, right? So are you using Wi-Fi or mobile internet?
Yes, sir. I have visited my hometown, so I'm using mobile internet, sir.
That's the problem, right? Mobile internet may be, definitely it will be very slow and intermittently, right? It may be disconnecting. That is the reason.
Yes. Okay, sir. Got it. Thank you.